Hello traders, welcome to the Nexoel Trading Hub YouTube channel. So we're going to be looking at the weekly forecast for the coming week. And we are starting off from the dollar index. This is the weekly time frame. So if you guys can remember from last week, we look forward to the possibility that we may anticipate to see bearish movement of price to the downside because we identified this weekly bullish order block. You know, we saw how price reacted from the monthly zone the second time after the first mitigation, which we can see here. And within the monthly zone is this weekly bullish fair value gap. So you can see the first reaction and we had a bullish movement. Price returned the second time, taking out sell side liquidity. And then we have bullish rejection and further bullish push to the upside. So what we can see is the sell side liquidity have been taken. And looking at this particular weekly candle, what we can see here is a strong rejection of price to the downside, which is bearish. And we can see that we can't really find volume within this candle to give us the possibility that price would just strongly continue bearish to the downside. Hence why I told us last week to trade bearish to the weekly bullish order block we can see here, because from this weekly bullish order block we may find a reason to go bullish, and then the coming weeks we may see price possibly wants to journey to take out the buy side liquidity we have resting here, since we can see here that price has taken out sell side liquidity. And we have an unmitigated rejection block here, which is in confluence to the monthly bearish breaker block we identified from the monthly time frame in the last week forecast. You can possibly go back to rewatch that to see how the delivery happened. So we can clearly see now that price have traded into the bullish zone here, and we can see we had a bullish rejection to the upside on Friday because price printed a bullish candle on Friday, which is what gave us this bullish movement, and then price closed at this price level here. So what we can see is the fact that for now from the weekly time frame is that price is respecting this weekly bullish order block. So from the narrative we are seeing in the weekly time frame is to anticipate the possibility of bullish continuation to take out buy side, in extension this other buy side and this other buy side, which is this swing high point here. So basically just we considering this as the high point that sponsored the bearish movement that took out sell side liquidity, and here we have an unmitigated rejection block in confluence to the monthly bearish breaker block. So we may see the possibility of bullish continuation to the upside based on the narrative we are seeing here in the weekly time frame, except price decides to give us bearish reason to the downside, violating this weekly block, and then we can begin to look forward to further bearish movement of price to the downside. So this is the narrative we can see from the weekly time frame, but then we have to look at lower time frames to look at the delivery in the lower time frame, like the daily time frame. So let's head to the daily time frame. So here in the daily time frame, what we can clearly see is sell side liquidity taking bullish movement of price to the upside. Last 3 weeks, I think I told us to anticipate to see that price was going to take out this trend line liquidity, and I told us to expect a pullback into this fair value gap in confluence to this institutional order flow to give us further bullish movement of price into this daily bearish fair value gap. And what we can clearly see is that delivery happened. And what we can see, when price fully mitigated the fair value gap, it gave us bearish reason to the downside, which in the 4-hour time frame we identified that price reacted from a breakout which is in confluence with the bearish fair value gap also in the 4-hour time frame. So that further gave us a reason to anticipate a dip of price to the downside into the weekly zone. And I told us clearly that if price is going to dip more lower into the weekly zone, then we have this liquidity gap here in the daily time frame to anticipate the possibility that price is going to trade into that and then give us the possibility of a bullish narrative to the upside. So what we can see is that price have traded into the weekly zone, though price have not traded into the liquidity gap within the weekly zone here in the daily time frame. And then we have bullish movement of price to the upside based on the delivery we can see here on Friday last week. So what we can see now is the bearish delivery to the downside. We have a bearish fair value gap established here, price reacting from the weekly zone. So if we're going to see bullish reaction or bullish reason here in the dollar index, then price may decide to continue bullish, and what we may see is that price will violate this fair value gap and then gives us a reason to continue bullish to the upside into the volume of this bearish order block here in the daily time frame, as we can clearly see that here, before we have the possibility of further bullishness to take out the buy side liquidity into the rejection block identified from the weekly time frame, which is also a bearish breakout block zone in the monthly time frame. So we could either see this delivery, or we may see price return to the downside, possibly price straight to the fair value gap we can see here in the daily time frame, respect that, return to this liquidity gap, and then price may give us a bullish reason to continue bullish here to the upside into the daily bearish order block we can find here in the daily time frame. So this is the bullish possibility I'm showing us. And then for the bearish possibility, clearly we'll be looking forward to see how price would want to violate this zone and mitigate the void, fill up the void, and continue bearish to the downside, violating also the bullish order block within the weekly bullish zone. So this is the daily bullish order block. Price violating this, and then we can begin to look forward to bearish possibility to the downside. So this is clearly what I have to show us from the daily time frame here in the dollar index. Let's check that out in the 4-hour time frame. We may possibly see candles we may consider for a bullish movement, and also candles that may give us a consideration for a bearish movement of price to the downside. So let's look at the 4-hour time frame. So here in the 4-hour time frame, clearly what we can see, I told us price reacted from a breaker in the 4-hour time frame in confluence to the bearish fair value gap. Clearly we can see that here. So we can see this is the sell movement before the buy movement took out this buy side displacement to the downside, taking out the low. So we can see price traded to that. We identified that last week, and that gave us a reason to anticipate the possibility of what bearish movement to the downside into the weekly zone we identify. So what we can see is price gave the bearish movement, and now here price created equal lows. So we have sell side liquidity resting there. So we can see here we have a buy movement before the sell movement that created this low points. And what we can see is when price returned into that, mitigated that, gave a bearish reaction, but then this failed to continue bearish to the downside. We're seeing price giving us bullish candle to the upside. So when market opens and price decides to respect this bullish candle here, we can see that. So if price gives us possibly a movement and then we have a pullback respecting this, then we can start considering price to give us bullish reason to the upside. And if what we can see is that price trades to the downside, violating that, then we may see price gives us a pullback to continue to possibly take out the sell side liquidity we have here. And then within this liquidity gap zone, we may see price gives us a buy model to want to continue bullish to the upside. So this is the narrative here in the 4-hour time frame. Except price decides to violate the zone strongly before we can now have a reason to really want to continue bearish to the downside. So this is just what I have to show us in the dollar index. So let's check out the Euro USD pair, guys. Here in Euro USD from the weekly time frame, what we can see is the reaction from the monthly bearish fair value gap zone, which gave us a bearish rejection to the downside after price took out this buy side liquidity, the swing high points. So we can see then price created an engulfing candle, a bearish engulfing candle, price failing to trade higher. And what we can see last week gave us a movement back into the bearish order block we can see here in the weekly time frame. And we can see that Friday gave us a bearish movement of price to the downside, signaling the possibility of a bearish rejection. So for us to be really bullish in Euro USD, it means that price would have to violate this bearish engulfing candle, and then we can begin to frame more bullish expectation of price to the upside. And also considering the direction of the market, looking at the most current volume, we can see how volume have been trading to the upside. So what we can see here now is the fact that price traded back into the engulfing candle, giving us this bearish rejection to the downside, and this was clearly printed on Friday. So price has taken buy side liquidity. Our probable expectation is to see the possibility that price may aim for sell side liquidity. So for the coming week, for the bearish possibility, we want to see how price may continue bearish to the downside, taking out this sell side liquidity, this other sell side liquidity. And in extension, we can start looking further to the possibility that price would aim for this sell side liquidity, because clearly this is the low that sponsored this bullish movement that took out buy side liquidity, volume closing below. So we may see price attracts itself to the downside to seek the sell side before the possibility of a bullish reason. But for us to then see a bullish reason in the Euro USD from the most recent price delivery we have here, it means that next week would have to violate this engulfing candle. Then we can begin to print for the bullish reason to the upside. So this is basically based on the narrative we're seeing here in the weekly time frame. Let's look at the daily time frame here in the Euro USD. So what we can see here in the daily time frame is the reaction from the monthly bearish fair value gap zone, and then we had the bearish movement of price to the downside. Now price has taken all of this sell side liquidity, basically a trend line liquidity. So we have this fair value gap left here, still not really fully mitigated, because this is also a balanced price range, because here we have a bearish fair value gap, and now we have bullish movements that rebalance the bearish fair value gap. What we have now is a bullish fair value gap left here. So we can see how price have traded to the upside here, reacting at this bearish order block that further sponsored bearish movement to take out all of the sell side liquidity resting here. So we can see Friday gave us bearish rejection of price to the downside, and we have a bullish fair value gap here. So for us to be strongly bearish, then we want to see the possibility of a bearish continuation violating this bullish fair value gap, and we can look forward to see price seeking the sell side liquidity here into this fair value gap before we further consider price aiming for the sell side liquidity resting here. So if price decide not to go bearish, looking at the next possibility is to see that price may trade into this bullish fair value gap. In confluence here, we have a buy candle before a sell movement. So we may see price react from that zone. If price gives us a buy reason in the lower time frame, then we can start looking to the possibility of a bullish movement to see price seek buy side liquidities. So these are the two scenarios we have to put in mind. If price gives us a strong bearish reason, possibly we look at the delivery on Monday. If Monday strongly closed bearish, then price may want to continue return to mitigate this as an inversion fair value gap to continue bearish, aiming for sell side liquidity in extension into the fair value gap. But then if price respects the fair value gap, the bullish fair value gap we're seeing here in the daily time frame, and in lower time frame we have buy model, then we want to continue bullish to the upside. That would mean price violating this bearish order block. For now, price has reacted from it, and it seems price is respecting that to give us the possibility of a bearish movement. But if price return to the bullish zone and price doesn't give a strong volume to want to continue bearish, then we can begin to look at the next possibility, which is price possibly giving us a bullish movement to the upside. So this is the narrative from the daily time frame. Let's look at the 4-hour time frame here in the Euro USD. So in the Euro USD from the 4-hour time frame, what we can see is price reacted from this fair value gap. In confluence, you can clearly see we have the sell movement for the buy movement that broke above this. So we have a rally, a base, a rally. So price traded to the base level or zone, and then gives us this bullish reaction of price to the upside. So what we can see is a reaction of price from the daily bearish order block, and we can see bearish movement to the downside. So we can see price giving us the possibility to aim for the sell side liquidity here in the 4-hour time frame into this bullish block. So what we may see is to look forward to the possibility that this might be what would happen in the market. Price aims for the sell side liquidity and then into the bullish order block we have here, and may give us a bullish reason into this fair value gap. And then we have a reason to expect to see the possibility that price may give us bearish continuation to the downside, or we could see price gives us a reaction after taking out the sell side liquidity, gives us a model to want to go bullish and then sustain its bullish reason by violating this fair value gap, and then we have bullish continuation to the upside. So this is what I have to show us, guys, in the Euro USD. Let's check out the GBPUSD pair, guys. Here in GBPUSD from the weekly time frame, what we can see is how price returned into this bearish order block, which we called out, that should be 5 weeks ago. and we expected to see how price was going to trade bearish to the downside into this key level before we start considering the possibility of bearish movement into the monthly bullish fair value gap zone. So what we can see is that price traded to the key level, and now we are seeing bullish movement of price to the upside. Last week we identified that we had this bearish order block from the weekly time frame, and we expected to see how price was going to trade bullish to the upside. And from this block we can begin to look forward to the possibility that we may have that bearish continuation of price to the downside to the drawn liquidity here, which is this equal low point into the monthly bullish fair value gap zone. So for the coming week, if the dollar is going to be bullish, then we may see the GBPUSD continues bearish to the downside, aiming for sell side liquidity resting here, and in extension we may see price aim for the monthly bullish fair value gap. But then if we are bullish, which we're going to look at that from the lower time frame, then it means we want to see price violate this bearish order block, creating a change in state of delivery, and then price may trade into this rejection block zone. Whatsoever reaction we see from this rejection block zone will determine if we're going to see bearish movement of price to the downside, or price may now continue bullish to the upside. So if this is going to continue bearish, when price trades into the rejection block, it means price seeks the buy side liquidity to mitigate the rejection block and then continue bearish to the downside. Else we could see what bullish continuation to the upside if price doesn't continue bearish to the downside from this bearish order block, in which we can see that volume have not yet violated it to create a change in state of delivery, guys. So this is what we can see from the weekly time frame in GBPUSD, but then we're going to look at that from the daily time frame. So here in the daily time frame, what we can see clearly is the level we marked from the weekly time frame, which is the rejection block level in the weekly time frame. So it means if price is going to violate where price has mitigated now, it means price would want to aim for this buy side liquidity. We have this buy side liquidity into that rejection block level, which is in confluence with the fair value gap. And here we have a sell movement before the further bullish movement of price that mitigated our sponsorship level before the bearish fall. So what we can see here, last week we had a confluence of this reclaim block and this bearish order block, which reclaimed price and then sent price to the downside. Price breaking below this low point, this bearish movement. So when price returned, price mitigated the bearish order block. So we have this level, and we can see when price traded to the upside, it mitigated that and then gave this bearish reaction to the downside. So this is what we'll be looking forward to see. Now we have an indecision candle. We have a bullish fair value gap resting here. So for the bearish movement, I would want to trade bearish. If price gives us a bearish continuation, I would want to trade bearish first at this level. Looking at how price reacts here would help us determine if we're going to see strong bearish continuation to the downside, or we may see price then trade into this level and then create a bullish model to trade into the rejection block level we have here marked from the weekly time frame. So I've been giving you guys the two perspectives, the two buyers, because I would admit the fact that to me for now the market is not really so clear. But then what we can see is that we're having bearish movement of price to the downside, which is now the most recent narrative in the markets. So it is either we see price trades to the downside, violating this bullish fair value gap, meaning volume strongly trading through that, and then we anticipate to see further bearish continuation to the downside, or price actually reacts from here and then gives a bullish model to want to trade higher, aiming for this buy side into the rejection block we have here. So what we can see is that price took out the sell side liquidity, bullish movement. So clearly we can interpret that we have a breakout level here. In confluence, we have a bullish fair value gap. So we have to wait to see the narrative at the fair value gap. If volume strongly trades through that, then would want to continue bearish. But then if price decides to face rejection from here, then want to look forward to price giving us a clear bullish model in lower time frame, like the 15-minute time frame, for us to want to have bullish movement of price to the upside into the weekly rejection block level. So this is the narrative from the daily time frame. Let's look at the 4-hour time frame in the GBPUSD pair. So here in the 4-hour time frame, clearly we can look at that from the level we marked from the higher time frames. So we have bearish impulse to the downside. You can clearly see what happened here is that price took out the buy side liquidity before we had the bearish continuation that took out those low points. Price mitigated the weekly rejection level, the bullish rejection level, and gave this bullish movement back into the sponsorship zone that took out buy side before the bearish movement of price to the downside, and price gave us this bearish reaction to the downside. So if we're going to continue bearish, then I'll be looking at this level, meaning if price is going to go higher, then we'll be looking forward to see price trade into this level, giving us a reason to want to go bearish. And then the bearish movement, I would want to first aim to see how price reacts here. The reaction here will determine if we're going to continue bearish to the downside, or we may see price gives us this narrative that price may come here, give the bearish narrative to the downside to this level, which we identify from the higher time frame, and price may give us a reason to want to go bullish to the upside. So this is what I have to really show us, guys, in the GBPUSD. Let's check out the gold pair. Here in gold, from the weekly time frame, what we can see is that gold has been bullish. Gold has just been creating new all-time highs without necessarily returning to fill up the fair value gap. So, last week we identified that we had this fair value gap. We may see the possibility from the weekly time frame. If price was going to pull back, then it was going to pull back to the weekly fair value gap and then continues bullish. But we can clearly see that price never did pull back from that, and then price continued bullish, which in the lower time frame we pointed out the possibility where price may just continue bullish, and how also price may just straight to the downside before continuing bullish to the upside. So here in the weekly time frame, we also have a fair value gap here, which is now the drawn liquidity to the downside. So it means if we're going to have a deeper pullback, meaning we have this as a drawn liquidity, but then gold can decide to still continue bullish to the upside. But then we have this form of rejection here. So price may want to dip a little lower, but may not necessarily dip into the fair value gap. And then we could see bullish continuation. So let's check the daily time frame. So what we can see in the daily time frame is this. So this is our weekly fair value gap zone. And in confluence to the weekly fair value gap, clearly we can just mark this sell movement here before the buy movement to the upside. So we can see that gold traded bearish to the downside into this bullish fair value gap here in the daily time frame. And we can see price respected the consequent encroachment and closed above that. So it means from the daily time frame, if price is going to continue bullish, looking at the fact that this fair value gap was respected, then we could just see gold continue bullish to the upside, creating another new time high. But then if we're going to have that bearish movement, then we want to see how price would trade with volume closing down below this mitigated fair value gap. And we could anticipate to see a reaction to the upside to then trade price to the downside. First, we want to trade into this level before we could determine to see price may now dip more into the weekly fair value gap. So this is a narrative we have for gold from the daily time frame. So first is a reaction that price may continue bullish, looking at the fact that price reacted from this fair value gap and closed above that. Then we could see then price trade bearish, violate that, return to retest that, and then we have price first trade into this fair value gap we have here, this bullish fair value gap, in confluence with the sell movement we have here before the buy movement. So it is either we see price gives us a push to the downside into this level and then creating a buy reason to continue bullish, or price then may trade into the fair value gap zone before we have that bullish reason to the upside. So this is what I have to show us in the gold pair. Let's look at that from the 4-hour time frame. So here in the 4-hour time frame, clearly what we can see is the daily bullish fair value gap in which price reacted from, and then we saw the possibility that price wants to trade higher. Here you can see we really do not have a clear sponsorship block there. So we can see that price have created a new all-time high. Here we had a sell movement before a buy movement. Price traded below that. Here we have a fair value gap. So it means if we are seeing bullish continuation, this is what you'll be looking forward to see, that price trades bullish. And then if price strongly violates this fair value gap, then we want to have our bullish continuation to the upside. Or we could now see price trade bullish into the fair value gap. In confluence is the sell movement before the buy movement that price traded below, and then we could see price gives us a sell model to want to trade lower, aiming for sell side liquidity into that fair value gap we identify also from the daily time frame. But you must pay attention to the fact that gold is still bullish and trading to the upside. So let's check the 1 hour time frame here in gold. So in the 1 hour time frame, what you can see is the reaction from the daily fair value gap. Here we had this consolidated price delivery. So price reacted from it. So from the 1 hour time frame, bullish continuation would mean price should not violate this engulfing candle. So we may see price mitigate this. So you want to look at the 5 minute, 15 minutes. You want to have a bullish reason to the upside. You want to trade bullish first into this bearish block, because we may have a reaction that may give us a bearish fall to the downside. But then since gold is bullish, price may not necessarily react and give us a bearish reason. So we could just see price come straight, violating that. We're expecting to see a pullback, and then we have our bullish continuation. So this is what I have to show us in the gold pair. Let's look at the next pair for the coming week, guys. Here in USDJPY from the weekly time frame, we can clearly see that price has been trading within this range we've identified, this high and this low. Price took out sell side liquidity, traded bullish, failing to take out this high. Price traded to the downside, failed to take out this low. So price has been trading within the range, and we can see it's a bullish narrative. Price took out this high here, a low that took out sell side bullish, took out external, a pullback, expecting to take out the high, but price failed. So we can see from the most recent price delivery is that price has been respecting bullish levels and then trading to the upside. And the most recent sponsorship block created, we anticipated to see how price was going to trade bearish to mitigate that, to show us the possibility of a bullish continuation. So clearly price have traded to the bullish sponsorship block created, and we can see Friday gave us bullish movement of price to the upside. So we may see the possibility that price may aim for the buy side here, and in extension this buy side, if we see that the dollar index is going to give us a bullish possibility in the coming week. So from the weekly time frame, we're still looking at bullish possibility, since this bullish zone or this bullish sponsorship block wasn't violated last week. Price reacted from it, and then we have bullish movement on Friday. So let's look at that from the daily time frame. So here in the daily time frame, you can vividly remember we looked at that in confluence with an inversion fair value gap here, and we can see how price have traded into that bullish rejection to the upside. So we may see price just continues bullish in the USDJPY to the upside. So whatsoever then makes price to return to the downside and then violating the inversion fair value gap, then we'll start looking forward to the possibility of price aiming for the sell side liquidities to the downside. So this is what I have to show us from the daily time frame in the USDJPY pair. Let's look at that from the 4-hour time frame. So what we can see in the 4-hour time frame is how price traded to the downside into the zone we made reference to from last week, and we can see how price mitigated that and started giving us bullish reason to the upside. So what we can see is that we have a bearish movement of price to the bullish zone. So there is no strong bullish model yet established looking at it from the 4-hour time frame, aside the fact we had a rejection and then now an engulfing candle to the upside. Here we have this fair value gap. So for us to really have a strong bullish reason, then we may want to see that price will violate that fair value gap and possibly even take out this high points, and then we may look forward to a pullback to have a bullish continuation to the upside. So if price respects this fair value gap zone, basically what I mean is this: we have price trades to the upside and possibly gives a sell model, and if we have a strong bearish reason to the downside, violating the inversion fair value gap in confluence with the bullish fair value gap strongly, then we may start looking at bearish possibility to the downside. So this is just the narrative I have to show us for the USDJPY pair also. So let's look at the next pair for the coming week, guys. Here in US oil from last week, we looked at all of this narrative and we expected further bearish continuation. And clearly we can see we had that bearish continuation because we have this as a draw on liquidity. So, we identified that price has violated this. Don't want to see a pullback for the mitigation and the bearish continuation. So price gave the pullback. Anyway, price did not mitigate that level and then continued bearish. So looking at the narrative now, we're still looking at more bearish possibility to see how price is going to take out the sell side liquidity, because now price printed this bearish order block, return mitigation, price respected that bearish movement, creating a change in state of delivery here, a pullback here, price to continued bearish to the downside. This is from the weekly time frame. Let's check the daily time frame, guys. So what we can see in the daily time frame is the fact that we have price gave us the bearish movement to the downside, which we expected. So now price reacting at this rejection level, and price has created a bearish fair value gap here. So it means from the daily time frame, we could look forward to this possibility that price may trade into the bearish fair value gap, and then we have our bearish continuation to the downside. Whatsoever gives bullish continuation with volume trading above this buy movement before the sell movements, then it means that we want to see price aim for this high, taking out this buy side liquidity into this level, which may now give us a reason to continue bearish to the downside. But then I'll be paying attention to what happens at the fair value gap in confluence to this low that was broken, to see how price gives us a sell model in the lower time frame to want to continue bearish to the downside, aiming for the sell side liquidity, since we are seeing reaction from this daily rejection block. But then if price decides to continue bullish, then we want to trade bullish to see price seek this high points and into this fair value gap. So this is a narrative from the daily time frame. Let's look at the 4-hour time frame here in the US oil. From the 4-hour time frame, reaction from the daily rejection block, and here in the 4-hour time frame, we can see that price is reacting from this 4-hour bearish fair value gap. So looking at it now from the 4-hour time frame, price may decide to open, the market may decide to open, and then continues bearish to the downside. But then if price decides to trade bullish violating this, it means clearly we see strong bullish volume. Then what is the next zone that price may trade into is what we want to identify. And then at the pullback, you could decide to take bullish movement to this daily level or take it more higher into this level. And then we could look forward to a bearish movement of price to the downside, aiming for the sell side liquidity. So whatsoever violates this bearish order block, it means that price is aiming for this buy side, in extension this buy side, into the fair value gap, which is in confluence to the breaker block level that was violated from the higher time frame, which we have identified. So this is what I have to show us in the US oil, and this is what I have to show us for the coming week. So you'll see the next video your way. Cheers and God bless you all.